Okay, hello everyone. Thank you for joining us today. For those who are unfamiliar with our series of webinars, last week we talked about Renko, bar charts, and market sentiment indicators. That is my main trading system. So today we'll begin analyzing and making commentaries of the market itself. It's preferable if it is your first time to do or to assist the record webinars. They are available at fxstreet.com in order to better understand the analysis we made at the market. Okay, so thank you for attending, and once again thank you to fxstreet.com to giving me the opportunity to speak. My name is Telmo Pinto. I'm the founder and director of market operations at Intuition Trading Group. For those who aren't familiar with Intuition Trading, we are a team of professional traders dedicated to provide simple, real-time, unified trading solutions for investors. You can see more details at intuitiontrading.com or at fxstreet.com, our website there at the services area. Okay, so we are at In the Money. It's important to know that the disclaimer. Okay. Any commentaries or any analysis in these webinars are not a solicitation to invest. Okay, you should carefully consider your financial situation as to the suitable to your situation prior to making any investment or entering into any transaction. Okay, you should seek advice from an independent financial advisor if you have any questions or concerns. So last week we ended our webinars, our series of webinars, explaining how we can combine the Renko charts with market sentiment indicators. Today we'll begin analyzing the market in order we can develop a more precise, in order you better understand how we give this or how we decide to enter or exit the market using the combination of the Renko bar chart and the market sentiment indicators. Okay, so let's open here the platform. Okay, so this is a real market now. Today, due to holiday on US, the market is not moving much. Okay, but this week is very important week because on the 6th September we have the ECB meeting, and on the Friday we have the non-farm payrolls report. So I believe from today overnight, okay, or today Asia session, we'll see a very high increase in the volatility of the markets. Okay, so let's begin with the EURUSD pair. Like I told you, on the EURUSD we use 21 pip range. Okay, each bar is 21 pips each, or this blue bar or this orange bar is 21 pips of the market. This is Renko chart, so the time is not relevant here. Okay, one bar can have the duration of 1 second, for instance, or 1 day. Okay, it's only defined by the volatility on the market. Okay, or the movements of the market. So from last Friday, we have here the last Friday. Okay, is here the market open at this level and not yet made one bar. Okay, the range is here. Okay, what is important to see on the euro is the levels of the stops. Okay, and the levels of the stops we can see like tools. We can go here to the Oanda. Okay, in the order book of Oanda we can see here what is happening on the euro is what happened in on the last drop, okay? On the last drop is what happening now clearly, okay? They are if you see here, okay, at this bar at the opening of the Sunday opening, we can see clearly here that the pressure was on the sell side, okay? There was huge sellers and no buyers on the market. What they are doing with this range, you can see this is small range, okay? 125.90 area, 125.60 area. What they are doing in this level is they are passing, okay, the sellers from the buyers. You can see here that each hours the buyers are beginning to appear in the market. So, and like I explained last week, this is good for we think in short the market. Okay? We can begin thinking that market is making a top at these levels, 125.80, 126 area. Okay? Because what? Because we analyze this as a contrary indicator. Okay? If there is buyers or if there is more buyers on the market here, the open positions, we can think in short. If there is more sellers on the market, we can think in long, okay? And what is happening clearly now is that they are passing, okay, the retail traders are passing from short to long side, okay? What is the key level here? The key level you can see here on the open orders is the 125.50, 125.20 area, okay? 30 area, 125.50 is the area where the stops are, okay? So if market come to here to this level 125.20, 125.30 area, we can think, okay, they hit the stops here, and at this level we can analyze, okay, so it's good time to short if they break this level and if the longs accumulate here. If at these levels the longs accumulate, we can think in short and earning there like 40, 60 pips, okay? I'm going now to the platform to show you, okay? As you can see here on the platform, we have here the levels or the stops are more or less on this area, okay? Here, okay? The stops. So I can think in short the market, okay, if the market comes to this level, okay? So if the market comes and close this bar, and close this bar here, okay, at 125.37, okay, I can think in short here, okay? So short here, what I can expect is a break of this, okay? You can see clear that a break of this trend line, okay, is the bar coming here. We can enter short, and what we can expand from our target, okay? We have this level here. We have this level here, okay? We have this level, and then we have this level, okay? So we can be alert of a bounce of the market at here, okay? This close is 125.60, okay? We can, because what this possible make is a higher low, and in this case, if market makes a higher low, we can expect more upside moves, okay? As we are clearly on an upside trend, okay? Higher low here, higher low here, higher low, higher low. This is a retracement, okay? Trying to come down, then break this channel here. They break this channel here and here. Okay, they break this channel, they retest the channel, go up again, making higher low here. Okay, if they come to this area, they hit the stops that we see on the order book, and we can expect the market come to here, here, or this level. If break, okay, and this is clearly awaiting for the news. If break this level, okay, we have a whole move possible to retesting this level here, okay? The 123.69, okay? But there is a lot of orders to market. Let's put here shape, okay? There's a lot of orders here, or a lot of congestion in this area, okay? Here, okay, this is clearly an area of congestion, okay? This ellipse here, okay? This area of congestion, because market was accumulating here, it was last week, market was accumulating here, okay? Break up, now possible coming down, I can see in shorts in here, 125.37, okay? This is possible first target, second and third, okay? This is a partial to then, if break this level here, this last level here, market have about 1, 2, 3, 4, 5, have about 100 pips to come to retest this level, okay? Okay, we can have here a minor support here, but most important support is here at 123.69 area, okay? So to resuming the euro, sorry, for going long, I want to see a clear break of this level. Okay, to go long, I need to see a clear break of this level. Okay, there is a huge volume of options at 125.50 area. Okay, there is lots of volume. Although the commitment of traders have lost about 9,000 positions. Okay, and they switch already from the long to short. So the big players are expecting a drop of the market. We can interpret like this. Okay, big players are expecting a drop. We have here 125.37, a possible drop, okay, or a possible entry. Okay, our stop, like I told, is always 2-3 bars of the market. Okay, and then we can expect market going down, okay, and then if break is there, we can expect another 100 pips move. Okay, so this is the situation now at the euro. On the GB, okay, on the British pound, this is the chart, okay. On British pound, I use 34 pips, and this mainly because the market is more ranging, okay. If we use small range pips like 21, we have a lot of noise. Even on Renko charts, we have a lot of these bars, like you can see here, okay. This is the so-called noise on the Renko, okay. Up, down here, up, down, again, up, down here, again, up, down here, okay. So it's preferably in these pairs, okay, like British pound, like Euro Japanese yen, GBP Japanese yen, okay. We use higher range, okay. So this is 34 pips. And what happening here? What happened here? They test this, okay. And now, if we entered short here at this level, okay, our stop need to be at least 1 bar above this last high, okay. If you entered stop here, we need to think, okay, I only will reverse my position, I only will assume my loss only if market truly break the previous high, okay. Because I will answer that soon, Mikey, okay? Because this is clearly a retest of the top, okay? Can be a double top, we don't know yet, okay? If this is a double top, or if market go and break, okay? And retest this previous high here, this high bar, okay? This high bar is almost 100 pips. On this bar, on this red bar, is almost 100 pips move, okay? And you can see on the Renko we have one single bar, okay. So if I am short here, I only rethink in going long if I see a break of the previous high, okay? In case of short, if market going and retest this area again, I can think in adding position, okay, or entering short. This level is a good level, okay? Although we have a lot of congestion here, okay? Let me put this way, okay? Here, sorry. We have a lot of congestion here, okay? There is many orders. We see here market was accumulating, up, down, up, down, up, down, up, down, then decide to break, okay? Go hard. This is almost 200 pips here, okay, or 180, 200 pips, then retrace, okay, then here, okay. So we can think in market going retest, okay, if coming down, we can think in short the market at this level, okay, anticipating a drop. Then we can see if clearly break this second level here, we can expect going down. Although we need to have very careful with this range here, okay? This, where is the ellipse here? We need to be very careful with this area, okay? If market can clean this area, okay, can go through this area, okay, so we can think we have a major top on the GBP, okay? Because as you can see here, for instance, from April, you can see here that market can clearly go down 162 to 152, 1,000 pips, okay? This is 1,000 pips trade from year to year is 1,000 pips trade, okay? Clearly a drop of the market, but it goes from 27 April, April more or less, to 30 May, okay? But in 2 months you can you can gain here 1,000 pips on the market, okay? Clear the downtrend, but that is happening already. We want to focus on what can happen, okay? So the GBP, to resume, if the break, okay, if go and clearly make a bar here, we can think in, okay, it's time to go long, assuming the loss of, okay, 2 bars, okay, and try to make 2-3 bars of target. I used to do a 1.1 risk ratio, okay, 1-to-1 risk ratio. If I am making 2-3 bars of stop, my target is equal to 3 bars, okay. If retest this level again, I can think in short and trying to make here 2-3 bars, although this area is a very high accumulation area. Okay, Boyke. So your question, when you use 55 Franco, depends on market, okay? I assume later this week I can look at 55 pips because I am almost sure that the volatility will increase very high, okay? We will have very high volatility from Thursday ECB meeting and Friday non-farm payrolls report. Sorry. But the 55 pips I don't use on the euro, okay? I only use on the British pound. On the Japanese yen is to forget, okay? On the Japanese yen, the 21 pips is more than enough in all market situations, okay? On Australian dollar, okay, the 34 is good to use. On the Swiss franc, the 55 pips can be used on high volatility, okay? And on the CAD, okay, on the Canadian dollar, the 21.34 is more appropriate, okay? So on highly volatility pairs like Euro Japanese yen, GBP Japanese yen, I almost use 34.55, okay? But depends on volatility, and when there is the case, I will alert you here at the webinar regarding this. Okay, so let's go to the Japanese yen here. Okay, the Japanese yen is a pair I don't trade too much, okay? I don't trade too much because the lack of the volatility can create some ranging areas that is no good, at least for the system I trade, okay? And we can see clearly, okay, let me show you here on the Wanda, we can see clearly on the order book where are the areas, okay? This is the order book of the Japanese yen. You can see here, okay, that the open orders are here, the sell, okay, and the buyers. There are huge buyers on the market at the moment, okay? We have the stops here, a little at 20 and 78.20 area, but there is a lack of volume, okay? At 77.50, we don't have, sorry, here a clear indication what the market can do or what is the level. So I am very cautious with Japan. And although the Bank of Japan sometimes do the buyers, okay, or control very much the market, okay. The Bank of Japan don't want at all a strong Japanese yen, okay, a strong yen, and they control huge. The Japanese yen is, in my opinion, one of the worst pairs we can trade because of the interventions of the Bank of Japan, okay. I trade sometimes, but not very often, okay. So let's go into the platform, okay. Here, although on the Japanese yen we have a sell side, okay. This is the level we can think in buy, okay. The 79 area, okay. We can think in buy the 79, or if you are short, continue short with a stop at 79 area. It's more than enough, okay. If market decides to continue the drop and retest here the lows, okay. Here this low at 70, at the 78 area, and then at the 77.80 area, more or less, okay. So if you are short, in my opinion, okay, continue the shorts. You can trail the market, okay. If you are not, okay, it's not good time because market already have made almost 150 pips, okay. This is a level, okay, you can think in buying the 79 area, okay. Okay, is here, okay. Regarding the Australian dollar, okay, they clearly make a top here, okay. They break this level, okay, last week, okay. This is clearly this up, down, another high, okay. But the retracement was higher and higher, okay. In this, okay, they retest, they make, okay, this is a lower hike, another lower hike, breaking this level, and you can see now the market drops heavily, okay. Boyki, no, they are not contradictory. I will explain. Let me finish here the Australian dollar, and I explain you regarding the Japanese yen, okay. As the Japanese yen is a contrary pair, we need to think with another way, but it's not contradict, okay. I will go that soon, okay. So on the Australian dollar, if you are not on the market, okay, let's forget, because this move is already on the train, already left the station long time. So is a risk. We go either long, okay, is like catching a falling knife, is no good, or in short, okay, market can go another 100 or 20 pips, but I prefer see a clearly entry and not enter in this already, okay, I move, okay. So we can think that market now is testing this area, okay. If this was high retracement, we can think, okay, market from the long time can make higher low here, okay, and we can interpret this area here or this drop here as a huge retracement of the market, okay, but it's not in a clear scenario now, so I prefer to stay aside from the Australian dollar now, okay. So, Boyke, regarding your question, let's go that quickly, okay. We can see here. No, it's not a contradict, as you can see here, okay. There are more longs on the market, longs are accumulating, and if you can see on the chart, okay, if you can see on the chart, the move is a short move, okay, so it's not contradict, okay, it's not contradict at all. Although we need to be careful with this, okay, with the open orders, we need to be careful, okay. See sells. Yes, we have the stops now at these levels, okay, at 78.20 area more or less, but they are longs here. The left, no, the left is the open orders, okay, is the orders that are not on the market, okay. So everyone is expecting the price go up in order to entering on the short side, okay. These open positions, okay, are the positions that are already in the market. So we can see clearly that the majority is long, okay. So the market drops, okay. On the left side, you see open orders. Is people, investors that expect that markets go up, okay, so they can enter in the short side of the market. So it's not contradict. What is not like other pairs is these levels you can see below, okay, on the open positions. You can see that we have here more sell shorts here, okay. Instead of seeing the open orders, we can see more clearly, okay, like there is no much liquidity on the market. We can see clearly the levels of the stops are more clearly see on the open positions than on the open orders, okay. You can see the bunch of stops, okay, stops, but we can't see on the open positions where the price may hit, okay, or where the price may stop. And this is no good for at least my type of trading. Is not a scalping at all, it's a trend following, and I'd like to see the price where market can bounce, okay, so I can trail the market, or I can do partial exits, okay, or partial profits of the market, okay. So let's go to the platform here to finish, okay. We are almost on time. To finish, regarding the Swiss the Swiss franc, okay, we are on a down move, okay. We can think in going long at this level, okay, a retest of this level. We can think we have two, okay, and if market then decides go down, okay, we can think in reverse our position at 0.95 area more or less, okay. We have this range, okay, here from here, okay, 96 to 95 is our key area, but the Swiss franc is always depending on the euro, okay, EURUSD pair. So it's important to see this week, okay, and the beginning this week is the euro, okay. The euro will decide the most movements of the market, okay. The Australian dollar is clearly on a downtrend, okay, clearly on the downtrend. The EURUSD is expecting some news or expecting some motivation for the investors to see. I am more inclined, okay, I'm more to the downside, okay, as they are switching, the retails are switching from the sell to long, okay. I can think better in short side, okay. The British pound, we can wait a break of the ice to re-entry, or a retest here this level to go down. On the Canadian dollar, okay, is depending already, is testing these previous lows, okay, from April lows. If it holds, okay, it's good to go long, but clearly in a range here, okay, up, down, this is 50, okay, this is 21, 34, sorry, this is 80 area moves, okay, so it's better stay aside and waiting for a clear move of this level, because we are near at the bottom here of April, so it's better we look. Okay, so tomorrow we continue analyzing the market. I expect today Asia session to be a more volatile one, okay, and I hope tomorrow we can see a better clear of the market and more levels we can see in order we enter or exit the market. Okay. I hope you all enjoying the session, and I hope to see you all tomorrow. Okay. Thank you very much again for attending, and see you all. Okay. Regarding the mic, okay, we'll be trading in a regular basis or only. Well, Mike, I see your email. Sorry, didn't have time to answer you yet, but I will answer that on your email. Okay, it's better I explain you on email. Like everybody else, if you want, you can see. Okay, let me put here. Okay, if you have any questions, you can see our webpage at fx3.com. Service signals intuition, or you can go to our website intuitiontrading.com, or sending an email to tradingdesk@intuitiontrading.com, and I will do my efforts to answer to those questions quickly. But Mike, we'll mostly look at at the major pairs, okay, that exotic pairs like Australian dollar, Japanese yen. Okay, I can make an analysis for one time, but we mostly focus on the USD pairs. Okay, so our time is running out. Thank you once again, and if you have any questions, please feel free to ask me so I can answer you. Hope you see you all tomorrow. Bye.